The dollar index continues to push up, but at the same time, gold is bouncing a little bit and stocks are down. That to me sounds like good old-fashioned risk off, but the only thing that's not playing ball is the yields world. Yields are still up. So let's pull up yields for a second. Take a look at the 2-year yield. Well, 2-year yield's coming down just a little bit. 10-year is up, 20-year is up. The yields on them, of course. I am long gold, slightly in the red on this initial position, but I had a little bit of a hiccup on my trade that I need to talk about. Just so long story short, I accidentally closed my first position and re-entered at like within a minute. So my P&L looks a lot better on the second trade, but this is initially when I got long gold. So I went long gold here, but then I accidentally closed out of my position early. I was clicking through my platform and I have my on my WeBull or whatever, my trigger is very light on closing and entering trades, which maybe I should tighten up. But anyways, I closed out of the position, then re-entered it. So same trade. I realized a loss and then entered it back right away. But I am in gold, and on my initial attempt, I'm still slightly in the red. So this is where, transparently, where I got long gold, but then I accidentally closed and reopened the position. So I just wanted to get that out of the way. If I pull up gold, you see the entries look a little bit different. That is what happened. I'm also short on oil. This one I did not goof up on. I'm still short on this one, USO. And oil is up slightly on the day. Well, it's up, 0.75%. So oil is up. Commodities as a whole seem to be up today. You've got the dollar index again, as I mentioned. You know what? I want to start fresh on this chart. I've got some zones that have been here for an entire generation. So it's probably time that we switch it up. What's it going to look like? Let's get the mystery box out. Hey, Dre, what's up, man? I caught EU at 1.08929 this morning. So I got to speak candidly here. Even though I've been bearish on the dollar, this looks like a little bit of a short-term breakout. So let me get some zones going here. So caught EU at 1.089. Dre, I'm imagining you're probably short on euro dollar. So let's talk about this. So we have a little bit of a breakout forming on the dollar index. We have some key resistance up here. We have some what was key resistance right here that actually broke out. The dollar index trading higher on the same day that gold is trading higher is something to pay attention to, okay? You always have to wonder, what is that all about when both are moving up at the same time or both are moving down at the same time? It's worth mentioning. Still bullish on gold here. Gold holding on to its bullish reading. I am still also long TLT. The 10-year treasury bonds looking relatively attractive with some slowdown in the economy. Recently, again, we've had manufacturing PMIs missed, GDP numbers missed. Services were a little strong, so that works against our idea there. But retail sales missed. Inflation, we'll get some latest readings of that this week. And then jobs last week were good, but they were mixed. So again, something to point out there. U.S. oil still bearish on this one. We've got platinum, Aussie Swiss, CAD Swiss, dollar Swiss, a lot of Swiss pairs. The Edge Finder's kind of pointing out the Swiss franc looking strong, right? So selling other things against the Swiss franc. I actually like that setup on the dollar. If you do get a little bit more upside on the dollar index, this level looks really interesting. For sell side on dollar Swiss, I like that one personally. And let's pull up the euro here. Again, Dre mentioned that he's short on the euro as of 1.0892. 1.0889. Wow, so you're up here. Very nice, Dre. Shout out to Dre.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Again, thank you for the donation, man. I appreciate it. Yeah, Euro looking like it really has changed its tone here, right? You had this really nice upward trend forming, then the big breakout here on Friday and the follow through today. So I'd say if I mean, as it stands, it already looks like it's kind of broken structure. You do have a little bit of support that's coming into today. If you break through that level, then suddenly things look a little wobbly for the euro. Dollar is looking, like I said, it's looking pretty strong. Hard to deny what we've seen on the daily chart recently. A little bit of a breakout here. I'd watch how this candle closes today, guys, because if you get a candle close with a long wick on top, if you get a candle that looks like this today, that could suggest like this is just a little bit of a pullback move. But if you get a strong bodied candle closing like this today, like if it closes how it looks right now, that could indicate that perhaps there's a little bit more upside here. But again, I think it comes down to what we get out of CPI and FOMC on Wednesday. So be very careful with this. I wouldn't read too much into the price action ahead of these news events. Yes, there might be some trades ahead of time, but just be aware that those news events will take precedence. The fundamentals there are just really, really important this week. The S&P 500 is, you can't even call this a pullback, but nowadays this is like the most pullback you ever see before it just rips higher again. I'm kidding, but right now the stock market is in just a super strong trend to the upside. I have sold calls against my VOO and XLK positions. I've talked about that a lot. So I'm kind of like very cautiously bearish on the market. I'm not shorting it, and I actually don't make a ton of money if the market sells off. I just cushion my position because I've sold calls. So I've sold the, well, let me check. What calls did I sell? Let me just pull this up. I sold calls on my VOO, the 490 calls and the 220 calls on XLK 1 month out. So we'll see how that one plays out. But 5th of July, so we're about 5 days into these calls that I've sold. Market is just about to open up, so we'll see what those calls are looking like today. But again, I sold my VOO calls at 490, so really like right where it's at. So basically, if the market rips higher in the next month, I will not benefit from that upside. But if the market goes down in the next month or pulls back, then I actually will be in a position of kind of a hedged position. So you could kind of argue that my position is more bearish than it is bullish, but I still hold shares long. So my money is still parked long on the, on VOO and XLK and that sort of thing, but I've sold calls against my position. So short term, I do think that the indices have room to pull back. I know Frank also is kind of in that camp. Some of the economic data is coming in light, and again, I think with unemployment on the rise recently, I think that you have PMIs slowing in the manufacturing. You have a couple figures there that just don't look super attractive for the indices, in my view. Again, the slowdown factor keeps me a little bit more oriented towards these three setups. I'm short oil, I'm long gold, I'm long bonds. So that's where I'm at with it. The VIX is up today. VIX being up today makes sense because, again, you have CPI and the Fed meeting this week. So volatility is kind of expected. So the VIX is going to jump on that. The Russell is down 1% on the day. I mean, this is, man, if you're somebody who watches the Russell, does anybody here trade the Russell? Let me know if you trade the Russell. Type yes in the chat if you ever trade the Russell, whether it be through options like IWM, or if you ever pay attention to the Russell at all, just type yes in the chat. I'm just curious. Super laggy? Are we lagging? Is anybody lagging? But yeah, so look at the Russell. I mean, the Russell's down another 1% today. This market is not it is not a fair, not all markets are treated equal. Okay, because look at this, down 1% to start Monday. I mean, 1%. The Russell is smaller cap companies in the US, and I've given this speech 100 times, but bear with me. Small caps have done nothing in years. Smaller companies are still taking it on the jaw, right? From higher interest rates and an economy that is holding it together. But I make this point too. Why focus on the Russell? Why focus on the Russell? Because if you get the holy grail set up for the Russell, the returns are bomb. They're massive, okay? So check this out. If you get good growth and interest rates that are accommodating or low, right? The Russell will fly. Like, if that environment sets up, in my view, I want to be long the Russell. I want to be holding on tight to Russell positions. In fact, that's a scenario where I almost would touch some calls. Like I'd get long calls if this perfect scenario sets up. Why? Because look what happened in 2020. In 2020, the Russell exploded. It doubled. It went up 150% because the Fed was accommodating and growth was holding in there, right? Fed was printing money like crazy. My point was showing you that is that when you get the perfect scenario of, an expanding economy and accommodative Fed, that's when I want to be long the Russell. But is that today? Is that right now? No. And I think if you're patient, you'll get your chance with the Russell. And that's my opinion on it. I want to touch the Russell myself. I want to be long the Russell, but not until the clouds roll away. Again, the bane of the pro and con of the Russell is that if you get a Goldilocks clouds roll away scenario, you want to be long the Russell. But if you don't get that, you want to stay far away because this thing just, again, has done nothing in several years. I shorted oil off the idea that economic data coming in light. I think rates could come down from that same reason. If rates do come down, you might actually see oil prices start to move higher at some point because, again, that could stimulate the economy. But my thought process on it is that I'm going to trade the trend that's in front of me. So let's say that this is the economy, E for economic data. If economic data is trending lower, and you might say, well, then they will do the rate cut. So then it's going to actually trend back up, right? Maybe, but maybe it doesn't. Maybe when they cut the rates, it's because the economy has already turned its ship and it may go for a while before it turns. Again, the stock market, the market itself, oftentimes is wrong. We know this. If you look at 2020, 2022 was a massive popping of a lot of liquidity that came into the market from stimulus checks and free money from low interest rates. My point is this: on the first rate cut, when they do actually cut rates, many people are anticipating that this will happen, that you'll have the perfect, the economy starts to cool, rate cuts happen, and the market is back, and that a sudden huge increase in liquidity will bring the market back to a roaring economy again. And that could be the case. And I'm not saying that it can't be the case, but I want to be prepared for either way. So this scenario where the economy continues to deteriorate after rate cuts, that is gold city. That's where I want to be long gold, long TLT, etc. And then in this case, no question, stocks. So this is kind of where we're at. We're approaching what I think is the rate cut moment, and we don't know what this post-rate cut environment will look like. I mean, first of all, we don't know when the rate cut's coming. That's still up for debate. This is a moving needle. This is why stocks and this is why markets are so hard. We don't know when the rate cut comes in. We also don't know what happens after the rate cuts. But for me, I'm going to follow this yellow line. Wherever the economic data goes, how will I track that? Edgefinder, come on. I'll follow the economic data and stay in line with what it's telling me. If the economic data starts to come in hot after rate cuts, I am back into stocks. I am in stocks right now. I'm keeping a position in both of these to kind of hedge my bets a little bit. But I'll be heavier in stocks if we get this environment, and I'll be heavier in these TLT, gold, etc. In the opposite scenario. Was that helpful? I don't know if that was helpful to you. If that was, do me a quick favor, just type yes in the chat. But what are your thoughts? Stocks ripping higher, unstoppable uptrend here. Nvidia is a monster. What are your thoughts?
Yeah, so I am getting positioned for some volatility, as you can expect. So I'm looking for, I think that there's way more downside potential than upside potential. I think if we go upside potential, that's the market ignoring a lot of stuff. And I think if we have downside potential, that's like the quick, aggressive, nasty cleanse that the market's probably fearful is likely. But I think that's the higher probability is that the Fed this week talks the market down a little bit. I was gone a week like you were last week, and I just spot checked. I mean, honestly, it was a pretty easy trading week. I actually hit, new highs and watermark highs for all my accounts. Like, couldn't have asked for a better time to be away, to be in a terrible time zone to trade. I mean, you were in Ireland, right?
Yeah.
You're in Ireland. I was in Germany all week.
Germany, yes. That's tough times.
So I was like, I mean, at this time, I'm 6 hours ahead. I'm like, there's just no way I'm going to trade. So, I mean, I was checking on things, and, evening time is like middle of the day in the US. So I just followed along, but I didn't place a single trade. I didn't have to. All my trades that were expiring on Friday were full profit. So I just let them do their thing. But anyway, I think that I'll show my screen here just a little bit. I think I'm presenting or sharing on the other end. Yeah. So let me make sure this trade got filled, and I've got one more trade to fill here, similar in this account, and I'll tell you what I'm doing here. So 9072.
Of course, that dollar index too. I don't know if you saw that dollar index.
I did see that. That was
still playing some dollar crosses, right? Or you have a basket against a dollar or something?
Yeah. So I'm still mixed on the dollar. I mean, right now my positions that are doing well, my dollar CAD is cranking to the upside, finally in two positions here. So I've got the dollar CAD. I bought in on this first pullback right around 36.50. And then I bought in around 3,600. So I've got two trades in, all running to the upside. I'm trying to get the dollar CAD back to 38.50 or higher. I think that that's possible to hit that level this week. Another one, I mean, right now we see that, oil has made a pretty good drop to the downside. So that should also favor, well, it did make a downside move, but oil's kind of ripping back here. This is another position where I don't want to trade it. I feel like the dollar index to me is a bit noisy. So I'm kind of trading both directions. But the oil play, it's like I still want to buy it low. I want to sell it high. I don't really like how this is very indecisive, unless if we see this happen, Nick, where we go up here, challenge this high, that might be oil's way of making, bullish head and shoulders or something like that. Otherwise, sell resistance, buy support, stay out of the middle. That's at least what I'm trying to do. I'm sure that you were paying attention to, gold and silver last week. So I did obviously acknowledge the recent sell-off, but this isn't a huge surprise to see sideways on gold. We had talked about this in a couple of our sessions. Looking at this type of kind of broadening pattern, it's just volatile. But if we come back into 2270 or so, there's still some ample support around that 2270 handle. If we go lower than that, I mean, could you see gold coming back to like 2150 or 2100? I could. But yeah, go ahead.
No, I was just gonna say, I think a lot of times people will look at this kind of recent choppiness and be so quick to think that, it's full on reversing. But
correct.
The way you've got your chart pulled up, the daily chart zoomed out a little bit. Yeah. You're sitting in consolidation right here. If you do break, 20, let's call it 2300 convincingly, let's say go down to 2250, start really breaking that level, then maybe we have some short-term downside. But people have to remember that gold doesn't move straight up. It doesn't move, forever. And even in its greatest bull markets, there are phases of consolidation for, in this case, even a few months. I think sometimes people forget that the whole world isn't day traders. You know, a lot of times there's like swing traders, there's investors, there's stuff that takes time. Like the elections are kind of another pending event for the VIX and gold. I feel like the theme of this year. So
Yeah.
I think just give it some time. I personally am still bullish unless we break support, and then I think you have downside for a deeper pullback. In all
Sure.
honesty,
Sure. And I'm drawing this out here. I mean, starting from this low back in 2023, is that the low? Is that 20? This has to be 2023. Yeah. So this is September, October 2023. If
Mhm.
I'm right in this, I mean, if this is a wave, wave 4, which is essentially a pause. Wave 4 usually is sideways. Usually it's consolidation. So I think a tricky wave 4 would be that broadening pattern. I think that a wave 5, if and when it happens, could be like another fairly aggressive run to all-time highs. I don't think that gold gets all the love that it possibly deserves technically until the dollar really makes up its mind. I look at this. I mean, I have been quite perplexed for the last couple of months on what true direction the dollar wants to go, because it's tough to trade, man. I mean, if you look at every pair individually, ECB cuts rates, the BOC cut rates, what other central banks might be cutting rates ahead of the Fed if and when they cut rates in September or November or December, or who cares at this point. We're not going to find out until maybe they give us some more information on Wednesday. And I think if the markets are all-time highs, this is also another issue for the Fed. If they cut rates at all-time highs and we have a bit of an asset bubble, that's not a good thing either.
Right.
And I mentioned this in my earlier session. There is a way that this market, just for the week or so, and this is what I'd expect. I mean, I'm staring at the technicals here on the higher time frames, the weekly charts, overbought with divergence. I could see a pullback and a correction happening, but from that pullback, as long as we don't do any major structural damage here, if we have a pullback, but then the market rips back up again, and then we just have like this. Maybe it's volatile, Nick, but if this market finds a way to shrug off and it keeps making these higher lows, we could do this all summer long. And maybe the market's only up like 1% for June, or a fraction 1%, or up a 0.5 to 1% in July. That'd still be historically accurate because it's still up.
Sure.
But longer term, we get into the election, and that's where all the drama is going to be. And I could see this. I could see us getting into the election. I talked about this earlier. I could see us getting the election. This is what happens prior to the election. The election, expect all the volatility in the world or all the uncertainty in the world. I could see the market not caring about it at all. Capitulation, blow off the top, and then I'm going to expect a reset like we had in 2022. I would expect a similar type of reset in 2025. Also, the inverted yield curve thing, we've now gone over 500 days for an inverted yield curve, but the average before we go 3 months to 10-year inverted yield curve, the average is 2 years. That's when the window is. So 24 months. And so we're not to that point yet. And that would put us in that 2025 window for a reality check. You can call it a recession. Some people already feel like we're in a recession. If you're trying to buy a house right now, you probably feel like you can't. So it's like, is that a recession? I don't know. I don't know. It could be a wild year, man.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.